All right, guys. So I'm gonna share my screen. What books do you recommend? The Intelligent Investor is a really good one. One Up on Wall Street is another good one. Um, but really, like I would pay attention to Warren Buffett a lot. I would pay attention to Benjamin Graham. That's his mentor. I would pay attention to him a lot. Peter Lynch, I would pay attention to him a lot. Those are like some of the best investors of all time. Let me start sharing my screen, guys. All right, guys. So I kind of created like a little PowerPoint just to make it, a little bit easier and a little bit more of an illustration for you all to see. It's going to be really fast. I'm going to probably go through it pretty quick because it's very basic information. But for this, it's kind of just like an introduction to the stock market. And then, like I want you all to ask me questions, whether it be in here, whether it be outside of here. Just ask me a bunch of questions and I'm going to kind of be here to help you. So yeah, like I said, this is kind of just an introduction to the stock market. As you all know, I am a business owner myself, Gore Financial Group, and our slogan is "We make investments simple." So today, I hope that I can make the stock market simple for you all beginners, right? So guys, so like what is the stock market? So the stock market is an open exchange, like where investors can buy shares or ownership in a publicly traded company, right? So one of the key things to pay attention there is an open exchange. So the exchange is basically money for the shares or ownership of a publicly traded company, right? So the ideal process of like how a company goes from kind of like putting their shares on the market to getting to the investor. Basically, a company basically says, we have this amount of equity that we want to put in the public market to raise money, right? That's most of the time that, publicly traded company will actually go public, is to raise money for their company, right? Just because kind of without investors, most companies will die. That's just how it works. So for example, in this example, I'm using Amazon. Amazon's a publicly traded company. They're one of the biggest companies in the world. Basically, Amazon's like, we want to put out this amount of shares at this dollar price, and then that will equal the total amount of money that they want to put out just into the market. So just using very easy numbers, let's say that they want to put out $10 million, ownership into the market, right? And they wanted to divide that into shares of 10, right? So each share will be worth $1 million, right? So that's kind of just like a very easy way to kind of just understand like a company, a publicly traded company, they always want to push their shares to the market or push their equity to the market so they can raise money. So after they do that, then it's a stock brokerage. So a stock brokerage is like the person in between me and and the publicly traded company. What they do is they basically put our buys and our sales into the market, and then they give us our profit, or they give us our loss or whatever. And then obviously it's kind of just a transaction and it goes back and forth. So and then I thought that it would be like very important to actually note this. So there's different type of investors in the market. There's retail investors. So retail investors are just like me and you, right? Very simple, me and you, we're retail investors. Then we have international companies. So like Coca-Cola, for example, Coca-Cola is a huge, huge company. And basically, some of these companies, they actually like hold shares and equity in other companies. I know it might kind of be a cliche, but obviously they're not going to, invest in their competitor or anything like that, but they will invest it into, a different market, right? So Coca-Cola is more of like a drink type of thing. They might invest in maybe energy or oil or anything like that, other companies. And they're huge, right? They have billions of dollars they're pushing into the market. So they drive the market. And then we have institutions. So I grouped these together. There's different types of institutions, but just to keep it simple for you all today, there's going to be banks. So banks are huge. Like whenever we put our money into savings accounts, basically banks are putting that money into the market and they're investing it themselves. That's why sometimes you might get a return on your savings account or something like that, because they're pushing that money into the market. Then we have hedge funds. Basically a hedge fund is like a multi-billion-dollar company. Most of them are, and they're trying to drive price just one way or the other, right? So those are the three types. I kind of wanted to mention this just because retail investors only make up a very small portion. Me and you, we only make up a very small portion, while these other big companies and these institutions, they take up a lot of space. You know, they're pushing a lot of money every single day. All right, so guys, then there's two different type of retail investors, and this is going to be very important, especially if you're a beginner. Just kind of deciding which way you actually want to move in the market, right? So we have the long term, and then we have the short term. So the long term investor, you might hear it's also called swingers. And short term investors, you might hear day trader, you might hear scalper, you might hear like just short term, right? But there's different characteristics that kind of go with each one, right? So long-term investors, you're not really looking to put much risk, and you're not really trying to put much risk into the market, right? You're really wanting it to like put it there and have it sit there for a year, 2 years, 3 years, 4 years, 10 years, whatever, right? And just because you're having it sit there so long, it's actually going to require less trading and less corrections to your to your portfolio, right? So you're not going to be changing it as much, because if you want to, like, let's say you believe in Tesla because they're green energy, you think that's the next big phase, you want to put money into Tesla, you want it to sit there, so that's, you're kind of doing like a long-term type of thing. I did put that it requires less capital just because you're taking on less risk, right? So the more risk you take on, the more capital you're going to need. And then kind of just like a kind of rule of thumb, I've heard this from Benjamin Graham, like I mentioned before, Warren Buffett. A long-term investor really shouldn't touch their portfolio for like 6 months to a year. So when I tell you like it's just there to stay, it's there to stay. It's not gonna, you're not touching it a lot. So the opposite side of that, basically everything is different. The complete opposite. So for short-term investors, if you're day trading a lot, you might see people like losing a lot of money. They get kind of discouraged with the market because they're putting money in there and they're losing it in the day. You're taking a lot more risk because you're looking for those short-term profits. So across, let's say that somebody's looking for profits of a week to 2 weeks to 3 weeks, they're going to be taking on more risk than someone who's putting it there for a year to 2 years. Especially right now, we're hitting a low in the market. And basically, if you start investing on this correction that we're seeing on the downturn, if you hold it there for 5 to 10 years, it will always go back up. And like, hear me out here, basically, like in 2008, everybody did that, and look where we are now in 2022, right? So if you invest in like the bottom, you're going to make a good amount, especially holding there long term. So obviously short-term investors, you're going to be in and out every single day. It's going to take more capital, and then like I said, you're making adjustments on the daily and the weekly. So what are the types of market analysis, right? The types of market analysis, kind of like, how do you figure out what's going up and what's going down, right? So there's two different types. There's going to be technical and there's going to be fundamental. I'm going to explain those later, but just know that a long-term investor is going to be more likely to use fundamental trading or a fundamental analysis, while a short-term is going to be more of a technical analysis, right? But if you put them together and you use them in correlation with each other, you have a better chance of profitability in the market. And I say greater chance of profitability in the market, sorry guys. It's because you're never guaranteed profit in the market, no matter what. Anything can happen, anything can change in a day, in an hour. I'm telling you, it's especially been crazy since COVID. So, the most due diligence that you can have, the most, knowledge or research that you conduct, I would say the greater chance of profitability in the market. But it's never a guarantee. So fundamental analysis, what is that? You might be asking. So fundamental analysis basically is using like news reports, financial data, and then company activity to influence your decisions in the stock market, right? So like I said before, this is going to be more of a long-term type of thing, especially for your long-term investors, just because, for example, so an extensive lawsuit against a publicly traded company. So let's use a actual example. Facebook, Google, and I forgot it's someone else. They've been in a lawsuit for a very long time with the US government. I believe it's over like ads or something like that. Sometimes that can have a negative look on the investors, right? Because let's say that, a company's using like millions of dollars in lawyers and, court fees and everything like that. And, they're kind of losing profit, or, just stuff like that. That could be like negative, especially if you're trying to, be a long-term investor. I'm trying to hold it for a year, 2 years, 3 years. and something's telling me that the CEO might get in trouble, or he might get, jail time or something like that. That could be very negative. A positive example, right? So like, let's say that their earnings reports, like let's say they had an estimate that they were only going to make about $1 billion in a year. Let's say they make 1.5 billion. So if I'm an investor and I want to hold it for a year to 2 years, that's extremely positive information that I would like to know. And then the last example is kind of like a successful CEO takes the place of a current CEO in a failing company. Obviously, things have to basically happen in the company for investors to keep investing in the company. So the technical analysis aside, this is where you see the charts. This is where you see all the lines. This is where you see all those complicated kind of looking, images across the internet. So basically what you're doing here with technical analysis is you're using historic stock prices to influence the decisions in the market, right? So you're kind of seeing where price was at some point in time, and then you're correlating it and saying like, maybe something happened on the same day, like 2 years ago, and it drove the price down. So it's just historic like stock price data, right? So I put an example here. 37,000 is a key price for the Dow Jones Industrial Index. So just to keep it kind of simple, not to like, get you all confused and everything. I understand you all kind of new. The Dow Jones is basically like it's an index. So it's a group of stocks that basically, how should I say this? A group of stocks that kind of are an overview of the market, and there's 30 of them, right? So it's Amazon, Apple, Home Depot, Chase, Walmart, all these huge companies that you know of, and that they have tons of money in the market. It's basically like an overview of all of the companies in the stock market, right? And 37,000. So 37,000 is actually a top, kind of like a high point that we reached back in January. And ever since it hit 37,000, we've been straight down. So for example, this is technical analysis, right? I looked at the chart. I saw that, the Dow Jones, it hits 37,000, and then it hasn't come back. Then another example is just like at the market opens, stock market opens at 9:30 a.m. Eastern Standard Time. Basically at 9:30 a.m., you're going to see an influx of buyers and sellers in the market because they're trying to get their buys and sells in for the day. So, that's just a technical analysis that kind of just like, just how price is moving for like a particular stock. So, that kind of, yeah. So the question that you all might be asking is like, how do I actually invest? I just broke it down into 3 simple points. It's a lot. I'm not going to say it's a lot more complicated than this, but it's a little bit more difficult than I make it out to seem. I just want you all to kind of like get the gist of it. So we talked about it earlier with our first example. You're going to have to open a stock brokerage. So I talked about this in the chat. There's TD Ameritrade, there's Webull, there's Robinhood. I'm not a big fan of Robinhood. I'm sorry, guys. I did have it at one point in time, but I switched over just because there's just better brokerages out there. There's, Vanguard, Charles Schwab. There's huge ones out there, right? So you're going to need to actually open an account. They're going to ask you a bunch of personal questions, but they only ask you those personal questions just to make sure you're not like money laundering, any illegal activity, stuff like that. Just to make sure everything is going according to plan, just legally. Then you're going to deposit funds into the account. Whatever you feel comfortable with is what you should deposit in there. Don't think that you need to have 10,000, 20,000, 30,000 for whatever, because you don't. And then after that, here's where like the technical analysis, the fundamental analysis comes in. Just complete your due diligence, right? So I used the word earlier, due diligence. Another word for that is just research. Just complete your research. And then after you find, potential market moves, and you feel comfortable with that move, just invest in the stock market. I would definitely, this is just a recommendation on my part. I would start out as a long-term investor, and then I will open another account and then make it a short-term investing account, right? So what you can do with this, there's multiple ways of utilizing it. I've seen multiple ways, but me personally, you're going to open that long-term account. You're going to just put money in there, invest that, and then any profits that you have, just move it to another account. And then you can be a little bit more risky with it, and take on a little bit more risk if you feel comfortable. That's what I would recommend. I would not start out like day trading. I would not start out with options until you learn the knowledge. It's only because you all are pretty new that you all need to learn the knowledge first. So that's basically like what I have for you all today. I didn't want it to keep it like too complicated for you all. If you have any questions, just let me know. If not, guys, we were going to just, you know, let's see. You have to have those separated. So for example, like most brokerages, what they'll do is like you'll have like you have like a profile basically for like, let's say like TD Ameritrade. You'll have a profile for TD Ameritrade, and you can put basically like multiple accounts under that profile, if that makes sense. Yeah, you don't have to have them separated. It's just a lot easier because you have your money that that you want to put away for multiple years, and then you have your money that you want to basically like trade frequently. Puts on SPX are going crazy right now. You know what's crazy is I actually like called out the what was it? It was last week. Right? I believe so. I sent the trade out. No, I did. Yeah, so yeah, it was like August 16th. So August 16th to the 19th, I called something crazy. It was like basically before the drop started to happen. It's pretty nice. Let me know if you have any questions. I'm open for you all right now. Guys, I will let you all know this will be on YouTube later. So yeah. So you can have trading. Yes. Yeah. So like for example, with mine, I have multiple accounts under like one brokerage. So yeah. Oh, 6K on calls in the past day. That's crazy. That's actually crazy. Yeah. Still up 30. That's nice. At least you're still up, man. I wouldn't like get too down on it. I'm telling you right now, when Bitcoin fell for the first time in May of like last year, it hurt so bad. Like it almost wiped my account. But obviously I got it back. It's fine. Plus I sold on the next time, so it's good. I think Bitcoin is making a comeback. I think Bitcoin's going to like 14, 15K, to be honest with you. I think like seriously. I seriously don't. I don't think that there's going to be a correction anytime soon, because what I've been looking at is like the crypto market and the stock market. I've never thought that the prices were correlated, but I'm telling you, like ever since 2022, whenever we reach that high, it's literally, I'm not going to lie, they've been correlated in some shape or form. And that's just my opinion. But yeah, Bitcoin's at like almost exactly 20K right now. I just had it kind of bounce off of a do I have any RE futures planned? What does that mean? Say it again. Or do I have any RE futures planned? I'm not sure. I'm not sure what you mean by that. Oh, do I have any futures planned? Oh, forget the, oh, okay, got you. Yeah. I'm sorry. But yeah, I do trade futures. So I sent something in the main trading chat. Basically, so obviously on Friday we saw a massive downturn. The reason why we saw the downturn was because Jerome Powell, the Fed, he basically said that the economy's messed up basically. And that caused the market to downturn. And then we saw a small pullback on Monday, just because it was a bank holiday in Europe. And then ever since, the market's up and back up. Like today, we've been straight down. However, I will say, so for SPY, I was thinking, kind of saying at the beginning of the video, the meeting, I do think that we're going to probably see a rebound here soon. Like I said, like I think that we're going to see a rebound extremely soon. So I would recommend probably like staying out of sales. just because I think that we're gonna, some buyers are definitely gonna come into the market. Do I still long-term invest? Yes, I do. Especially right now. I'm telling you right now will be the perfect time to like start your long-term investments. Especially over like the next, probably like right now until like probably like the next 12 to like maybe like 15 months. Just because we're technically like in a recession, like we're seeing all the signs for a recession. So like I was saying kind of like earlier in the session, basically like you have to think about like moments like, oh wait, whenever the stock market completely crashed and there was a bottom, that is the best time to buy in, because you want to buy, buy low, sell high. I mean, I know it's a cliche, but it's actually very true, especially if you start to slowly invest over the next couple of weeks. You'll definitely see returns over the next couple of years. So definitely long-term invest, in my opinion. That's just my personal opinion. Make sure you complete your due diligence. Guys, we're a little bit past 9:30. Here, let me answer this. My plays today were on, and the one where was, where are you doing personally? So I was actually selling off today. Actually, I was selling off a little bit early last night. But it worked out pretty well. I did get out. However, if you look in the main trading chat, actually, I think I'm still displaying my screen, so I can just show you actually. Here, give me a sec. Also, guys, please do not fall for the fakes. So yeah, so this right here, I hope you all can see this. So basically, I was kind of like looking for it to push down here and to push back upward. And if you look, it's already like, if you look basically at the current chart, we're already starting to see pullback from here. So, oh, sorry, my bad. My bad about that. So I got 7 minutes left. My bad. So basically, this was the chart that I had sent. I'm sorry it's so small, but I can't zoom in. So yeah, so the market opened up right here on Monday, and I thought that it was going to push down a little bit more and then start to reject off of this zone and start to push back upward. However, kind of like I said, the banks were closed yesterday in Europe. The market was kind of moving sideways. Whenever market opened back up, it reached, it cleared this gap right here, and then it started to push right back downward. But like I was saying earlier in the session, literally I would say about 5 to 10 minutes right after this, it hit this zone, and then it's already starting to pull back. So basically what I'm saying, the pullback I was saying over here. But yeah, so literally I think that, we're probably going to see a little bit of buying momentum in the market here soon. Definitely. You have to think about it from Friday. Like the markets got crushed, right? So I think that some buyers are going to come back in, try to recoup some of their, investments, some of their money. And then we'll, just a little bit of positivity in the news, especially we should see over the next like day and a half. And then, but overall, like the next like 2 to 3 weeks, we will be lower than where we are right now. I will, there's a very good chance. But yeah, guys, I hope this worked out really well. Hopefully we can have more people in here next time. It's all good though. As long as like people are learning, I really don't care. So I hope you all have a good day. If you all have any questions, just let me know. And if you could, guys, just because there's like a couple of people in here, if you could drop like something, if it was helpful or not, maybe, like have make sure to tune in on like Thursday or whatever. That would be great. But yeah, so on Thursday, we're going to have a training session. I'm going to talk more about charts and like what to look for and the fundamental analysis type of thing. So hopefully that helps. Hopefully we can have more people in here, and yeah, I would really appreciate it if you all could maybe talk about if it was helpful or not. So yeah, peace, guys. Appreciate you. Yep.